Please stand by. We're about to begin. Good day, everyone. Welcome to today's Foley's Buying and Investing in Energy Projects in Mexico and Latin America call. As a reminder, today's call is being recorded. At this time, I'd like to turn the conference over to Mr. Francisco Cerezo. Please go ahead, sir.
Hello, everyone. Good morning, good afternoon, wherever you may find yourself. My name is Francisco Cerezo. I'm a partner at Foley and Lardner, where I chair our Latin America practice, and I'm also co-chair of the international practice. I'd like to welcome you to today's Energy Bootcamp, with the web conference where we will be discussing, as noted, buying and investing in energy projects in Mexico and Latin America. Jeff Atkin is the engine behind this. He had the idea. I think it's a great idea, and you'll find that there are some excellent panelists along with Jeff. Joining me, obviously, on today's webinar is Jeff. In addition to being an esteemed colleague, he chairs the firm's solar practice as well as the Latin America energy team. Jeff is a partner based out of one of our Los Angeles office, actually, but he travels all over the world. He's frequently in Miami, New York, and in country throughout Latin America. Jeff's been an energy expert well over a decade, particularly in the renewable space, and has worked and lived in Mexico and Central America for about 2 years. He's one of the most highly regarded energy attorneys in the AmLaw 100. He's considered to be one of the top 5 energy attorneys globally under the age of 40 and a top M&A attorney. He's been recognized by a number of publications, including Super Lawyers and Chambers and whatnot. And I've had the pleasure of working with Jeff on several very high-profile projects for some of our clients from Latin America, including a very significant solar energy project in Guatemala. We're working on a gas project in the Dominican Republic, and he's simply terrific. You know, he adds great value to matters. He's efficient. He's a deal closer. He's very business-oriented, doesn't get hung up on esoteric kind of academic issues. And just has simply a terrific network among developers, utilities, and just an overall hard worker. There's a client of ours from Central America who just was the sponsor on this, the energy project, calls him the Cinta Negra, the black belt. So it's really an honor to work with Jeff and a pleasure to have him on the panel. In addition to Jeff, we have several other just top-notch folks who will be participating on the panel today. The first speaker is Alejo Lopez. Alejo is a Mexico country manager of Hanwha Q-Cells. Alejo has worked in the solar industry since 2006, and he currently leads Hanwha Q-Cells Mexico business, where he's primarily responsible for M&A and deal structuring, project development, and PPA sales, as well as for growing their footprint in the most important solar energy market in the world, which we believe right now Mexico being one of them. One of the highlights of what Alejo has been involved with while at Q-Cells was closing the largest solar DG deal in Latin America. It was a 31 megawatt with off-taker Soriana, the largest Mexican supermarket chain. And then prior to joining Q-Cells, Alejo was, he managed a project and project development at Silkian USA Distributed Generations portfolio. In addition to Alejo, we have the pleasure of having Iñaki Herrero Arregui. He is U.S. country manager for Energy Solar. Energy Solar is a global full-service consulting firm for solar projects. Iñaki leads their North American energy team at Energy, and he brings over 7 years of experience in the solar sector and is specialized in technical due diligence. He's collaborated with lenders, investors, developers, contractors, manufacturers, and well over 200 solar projects worldwide with total capacity in excess of 2,000 megawatts. And last but certainly not least, we're glad to have on the panel today Miguel Jauregui Rojas. He's a partner, one of the senior partners and founding partners of Jauregui, Navarrete y del Valle. Miguel is the founding partner of the firm, and his main area of legal practice includes M&A, private-public partnerships, energy, oil and gas, and telecom infrastructure. It's a wide gamut. It's one of the leading firms in Mexico, and Miguel is one of the go-to energy attorneys in Mexico for sophisticated projects. So we're happy to have them be the speakers on today's webinar. I will pass the baton now to my friend and partner, Jeff Atkin, but before I do so, I'd like to just do a couple of housekeeping tips for those who are joining us, those that are attorneys in particular will be interested on the CLE component. So today's program will run for about an hour, and we'll apply for one general CLE credit, continuing legal education credit, for today's program. New York, New Jersey, and Kansas attendees applying for the CLE will have to fill out an attorney information form and write down a course code, which our organizer doesn't quite yet have, but I believe she'll be sending it to me any minute now. As soon as I have it, I'll be sure to share. I'll kind of chime in, and you could take note of it so that you could properly apply for your CLE credit. Let's see, another the attorney affirmation form, and today's slides can be obtained in the materials section on your screen. So if you go to your materials section, and you could get not only the materials, but also the attorney affirmation for CLE purposes. And then lastly, if you have any questions as our speakers are going through their presentations, you can submit questions during the web conference by entering them also in the Q&A questions and answers box that you'll find below on your computer screen. So without further ado, thank you everyone for participating, and thank you thank you to our speakers. And Jeff, off to you.
Beautiful. Thank you, Francisco. And it's a pleasure to be on this panel, and it's also a pleasure to have the other panelists, here with us. Had the pleasure of working with, all of them, I guess, and I think that they're doing a lot of good work. So for the rest of the presentation, here's a quick overview and outline of what we'll be going through. So first, I'm going to run through just a couple of slides, an overview on Latin America and what we see. We'll go then to some common structures that are being utilized and some common issues to consider. And I'll run through those. At that point, Alejo will run through the third point, creating a successful joint venture, and some common mistakes in cross-border M&A. We'll have a couple of the panelists might have a few points on these as well. Then Miguel will give us a little background on Mexico and the Mexico energy reform. And then on that side, Inertis and Iñaki and his team will run us through some due diligence considerations and selecting a site in Mexico. At the end, we'll leave a couple minutes, hopefully, for some Q&A. Like Francisco said, you can type those into the Q&A box. If we can't get to them at the end of this, we will also respond, and one of the panelists will get back to you in an email. So for an overview, why I think anybody on the call realizes the potential growth markets and the opportunities. So we have a number of countries with very good population bases, with a growing demand for electricity, with excellent natural resources, be it especially when you look even at the renewable space with wind and with solar, with hydro, geothermal. They're some of the best places in the world. They've got some promising reforms that are happening across. We're going to talk a little bit, and Miguel later will go through Mexico in particular, but some reforms like that are really making the place attractive to the international market. And part of the discussion we'll have today on our slides is really how do we structure these transactions to take advantage of that attractiveness to the international market and bring to Latin America investors, developers, suppliers, banks, and financial parties that might be even new to the area, but that get them comfortable, with investing there. So foreign investors, Europe, particularly from Spain, there's been a number of Spanish contractors and developers active in Mexico and throughout Latin America for several years. The U.S., the proximity of it to the U.S. has also been very helpful, and now there's many U.S. companies looking at it. And then Asia, that's China, very notably, but also Japan, Korea, and others that are very active and going to be getting more active. Now, with newer markets and even markets that are being reformed or new reforms, there are also risks. And so part of that is identifying, calculating, mitigating those risks. The first market really we're going to talk about quite a bit today is Mexico. And Mexico is, one of the strongest markets for energy and renewable energy in Latin America. They've got a very, really rivaled only by Brazil, and 130 million investment grade. Banks and people will put money in. Very close to the U.S. There's a lot of synergies, and even you see companies now that are delivering power back and forth. And they've had a lot of wind and solar that have been constructed or are in construction right now. So there's, in this first quarter, there are 300 megawatts of solar alone in construction in Mexico, which just given, the background of solar in Latin America, that's a massive increase. Another country I just wanted to highlight was Chile. And Chile has, an excellent reputation globally as far as just a stable economy and good reputation on that front. It is a smaller population, though, and it does have some constraints with transmission and the location of their the location of their, solar resources and their wind resources versus the population. Now, on the good side, they've got a very strong mining industry, and plants like that can utilize it. They have a very high price of electricity in the spot market. And in fact, we're seeing multiple projects being done on spot, on merchant plants, so not even with power purchase agreements. They've set strong goals for an RPS, and it's one of the few countries in the world that can claim to be pretty much entirely unsubsidized for the renewable energy. So pretty impressive. Now, that's a country that's also seeing very, very much on a growth level, particularly in solar, where, a year ago there was literally less than 10 megawatts installed in the entire country, and in construction right now there are several hundred. So it's an interesting time to be in the marketplace, and, a lot of the things we've learned in developing these projects in Europe and in California are applicable. We're seeing some of the same things play out in Latin America. Other promising markets, Francisco mentioned a project in Guatemala. There are others in Central America that it's just a very natural fit to take advantage of, for companies there and the off-takers to take advantage of the resources they have with renewable projects, hydro projects, gas projects. In the Caribbean, it's been active as well. Dominican Republic, we've seen Jamaica recently come out. Puerto Rico has been working through some pretty significant projects for several years, and we're finally seeing those advance. Let's see. Zuleika, I might have lost control here of the panels, or of the slides, so if you can advance that for me, that'd be great. From that to the common structures, I'll move. And the first slide that's got some preliminary considerations. So on the preliminary considerations, this is really getting a sense, and we've got on this presentation and today, and a lot of the participants, they come from a pretty broad spectrum of clients. And so one of the first things really to do is identify your role. What role are you going to play? Are you a supplier? Are you a party? Are you a long-term owner? Are you an investor looking for what types of returns? And this moves into the expectations. And what are those expectations? On the management front, what are those expectations? Do you need control, want control, or going to rely on a local party? Alejo will talk about some of these as they relate to joint venture partners, and that's been a structure that's been pretty common that we're seeing in Latin America to take advantage of the benefits that each party brings to the table. Now, in going into a transaction like that, one of the first things you also need to know is my exit strategy. How can we get out, and what do we plan on doing to get out? And that's one of the areas where we're really working with, based on the particular needs of a company, to give them the suite of opportunity, the range on exit strategies. And part of that involves how we structure own, and how simple it is to move in and out, how we and many of these questions get answered as well on the expectations of the party and the strategies of the parties, to focus on what types of projects they're looking for in the stage of the project, if the party, the investor, is going to come in early stage, mid stage, or if they're looking to do something more at COD, the commercial operation date, and take the long-term ownership from there. And we've got several types of structures that we can use for each of those. Location of the party, finally, and then a tip is really identifying, assembling a dedicated team early on. And this is we've seen many companies who've looked in Latin America or started to look, and one of the key faults that happens is they do it as a part-time kind of job. It's just their team from China, their team from, some other place, might be the U.S., who's looking at it, just kind of sampling it. And if you want to be serious and really get dedicated, and Alejo might be a perfect example of this, but it is getting someone who can take ownership, take control, and really assembling the finance, the legal, the tax team around them to structure this so that you can really, that it can kind of pass through all the tests that will be required. And if we can move to the next slide in the chronology of the deal, this is sort of just a quick and dirty, not dissimilar to other transactions. Initial meeting start, an NDA, confidentiality agreement, or a letter of intent. You typically try to get exclusivity on looking at a project for 60 days, somewhere between 45 and 90 days, where you can have time to do due diligence, and there will be some non-circumvention, non-solicitation, typically language in there, and parts of it will be binding, but it gives you a look at the project, and where a buyer or an investor knows with some comfort that it won't be taken out from underneath them. In that due diligence period, you'll start moving to definitive documents. Depending on the type of structure, these documents will vary, but a purchase agreement, generally speaking, and one of the first preliminary questions on that, and this goes through the kind of each specific company and the projects, but how do we assess the liabilities? Are we going to do this as an asset deal, try to limit some of the liabilities or know the assets we're buying, or do we need to do this as a stock deal where we're buying shares or the ownership of an entity? And are there local ownership requirements or employee requirements or other things like that that might impact it? And then that decision, how does that impact our tax position for an international buyer? And so one of the more sophisticated levels that we're getting into with international buyers and investors is helping them structure, from a tax perspective, how to get into the project and how to get their money back and retain the return that they were expecting. Now, some of these cases, they become a joint venture. Alejo will talk about that, or they look more like a development agreement. With that, we move to the next slide, deal structures. And I'll go through this quickly, but a couple different ways people do it. They come in, acquire up front 100% of the project, and then self-develop themselves. They might be paying closing payments or milestone payments, and this is a structure we've seen in various places, but is very common in Latin America. Acquire, co-develop is probably more common, and that co-development can look like many things. It can be in the form of a development agreement, a services agreement, but bringing that local connection, and really, where in many of these countries, it's so important to have the local history and ability to transact. Third point is a co-develop from the beginning, and then the investor take the project out or buy it at COD or at placed in service, but at a subsequent time. And how that structure looks, many of those come in the form of a loan or a note to the company or to develop to fund development. Finally, joint venture, which Alejo will talk in more detail, and then debt and equity considerations. When you're investing, is it through debt, is it through equity? Many countries have, the tax considerations I've mentioned, and it's very interesting. Mexico itself, for example, the difference between a U.S. investor versus a Canadian investor or a Chinese investor into Mexico will drive different structures because of the tax issues. Now, and also the debt and equity makeup might be driven by the thin capitalization rules. Mexico has, and most of the countries do, have capitalization requirements, 3-to-1 in this case, which will drive some of that. So with that, can we move to the final slide? Just some final other considerations is we talked about the tax issues, looking at whether it's a pipeline of projects or a single project, and the considerations around those kind of things. Those come up in joint ventures. Social issues are something that we see quite a bit of in Latin America. We've seen in Mexico alone some local issues with some indigenous tribes that have shut down, projects of very large scale that had already closed financing even. And these are things that very early on, and Miguel might have a little flavor of this as well, but the local team, your local attorneys, your local developers, to help identify and really smoke out those kind of issues is key. Minority rights, and especially undisclosed minority rights, the land situation in a lot of these countries is pretty complex. And so having a good team to help you with that is critical. Structuring with repurchase options, that's something that's beneficial and often desired. And then the last kind of 3 points here, I'll point out, veto rights and deadlocks, dispute resolution, and governing law. And this is an area that I think we're really at kind of the front of the industry on to help structure these as international deals. And we're seeing investors, both on the finance side and on the equity side, saying, how do I get comfortable with this deal? Not comfortable using local arbitration, local law, or local venue on my shareholder issues, on my veto and deadlock rights. And many of these companies said, look, and plus our headquarters don't speak Spanish. So I need these in English, or I need these in a neutral location. And one of the things we're seeing is a real move to document these deals at an international level to make them the most attractive to the broadest audience. And we're seeing quite a bit of actual New York law governing documents. Miami is becoming one of the central locations for dispute resolution and venue. Fortunately for me, that means I get to see Francisco in Miami quite a bit more. But these are things that are projects and companies and people are doing to make the deals more attractive internationally. Now, that said, there are many things, land documents, power purchase agreements, and things like that have to use local law and have to use the local. And so kind of tying those together with ownership, with finance documents, is really a key to making the project look as buttoned up as possible. So with that, I'll move to the creating a successful joint venture and common mistakes for Alejo.
Thank you, Jeff. That was a great presentation, and hi everybody. I'm Alejo Lopez, and so I'll build on some of Jeff's comments and points because they're extremely relevant for a JV. I mean, at the end of the day, we're talking about what is the most efficient way for a specific organization to address a new market or a specific opportunity, using the optimal resource, using the resource in the optimal way, and also mitigating those risks that are critical for the company. So, in a way, JVs are a tool towards that mean and nothing else. So, the way I'm approaching JVs for the sake of this presentation is very narrow. I mean, JVs are, pretty wide field, but they're pretty narrow, mostly because the solar development and renewable energy development process is well known to all of us, and it's fairly straightforward, right? Accessing the land, permitting, getting interconnection rights, finding the right customers, and then financing the project, building, and then owning, operating, and then all the strategies that Jeff mentioned in regards to the roles that each one has defined for themselves. Through in which part of that development cycle do you see yourself? In which part of the development cycle is your partner going to help you? And so the first thing that I would ask myself is, why would you do a JV versus going solo, right, to greenfielding or something like that? And I think that there's not a right or wrong answer to that. It's just mostly to me stem from what are your goals? What are you trying to address in this new market? How much you know about that market, and also how much in-house resources do you have that can help you answer some of the key questions when it comes to market access. And then how fast you want to do that. So what timing have you set yourself to? So JVs, I think I found in my experience, is that they're very, very helpful in addressing the market by having a local partner who has direct knowledge of or direct access to customers, can bring to the table some of these key assets that make up a project. And so, I've seen them from, the full gamut of partners just being very specific in providing customer access, and that is very common in Mexico. And in many cases, parties will just, have no knowledge of solar and then, provide you access to a specific customer to a PPA. And excuse me if there's a little bit of noise. It seems to be a helicopter race right over the hotel right now. So, in those cases, maybe those types of agreements can be addressed through maybe commission agreements or something like that. I typically look for a partner that can bring, other elements of the project that can mitigate the risk. But definitely that, is critical, having that access, particularly to a customer, but not just that. In terms of access, I always, try to, tell myself that your partner is never a substitute for a good lawyer and a good accountant. So, you still need to have that. Risk sharing is another critical item in any JV, and I think, the point that I have right under this in my presentation, which is funding constraint, to me is directly tied to that risk mitigation. And it's basically, if that JV is well balanced, then probably you will be finding an agreement that both your partner and yourself are pretty happy given the roles that you've assigned to each other. So, definitely JVs can be useful, but I would, always direct back, your attention to the different structures that Jeff mentioned, like full acquisition of the asset or other avenues to develop a solar project in Mexico. This is one other point that I always it's good that I found this statistic. According to the Harvard Business Review, 49 of JVs fail, and I thought that was striking. And doing a little more research on that, I mean, most of the JVs fail basically on the conception phase, and on the planning phase, not necessarily on the execution portion of the agreement. And to me, that's not surprise. Just trying to think about projects that I'm working through right now that the ones that I have most issues with, I can just go back to that term sheet that we signed months ago or maybe a couple of years ago, and there are misconceptions there, things that we didn't address that they snowball and became real issues. And in many instances, there's ways around that. You can always fix it, redirect the partnership, but in many cases, they can be fail. So planning is very good. So in terms of, the key elements to creating a successful JV in Mexico, I would say, I highlighted, 4 of them. And I think, the first one, alignment, can pretty much, to me, summarize the rest, because alignment, I would include within that, not only your partner, but also what is the alignment with, the parties with the project economic and the, rest of the, elements of the project. Because at the end of the day, you're both going to be, getting married and living and having a relationship that will benefit from this project or this year. So alignment is critical, and I think the that I found most useful is to really first be clear on what my goals are. What do I want to get, out of this opportunity? What do I want to do in Mexico? what type of pipeline do I need to, do I want to develop, and what is my role? What am I going to be doing? I'm going to be operating this project, I'm going to be developing this project, and I think that can help you answer a little bit the next question, which is, what partner do I need for that? And then I think that's very helpful. And, in Mexico in particular, when you're talking about solar, you have to be very well aware that probably you know a lot more than your partner does about solar. Is a new market, in Mexico, and everybody's aware of the, energy reform that the country's undertaking right now. So whatever rules existed will pretty much be changed. So, in many cases, you will be on par with your partner in terms of how the market works. So, it's really important that you, find that, what is the real value that your partner is bringing to the table, and what do they want in return, which takes you to the next point, which is economics. And I found, this also to be a very critical point is the right partner will allow you to have, a balanced risk-reward for both. Unfortunately, this is not always the case. I mean, I've seen in many projects in Latin America that, especially related to renewables, where there's not a whole lot of experience. I mean, wind, it's much better understood now than before, but solar is at the stages that wind was, 5 or 7 years ago, where local people have pretty significant misconceptions around how technology works, obsolescence, cost, pricing, and all that stuff that sometimes misinforms the returns that these projects can have, and also the margins that you plan to make. So it's good to be to have a fairness in what your partner is going to bring, what are you going to bring, and make sure that you're happy with that and your partner is happy with that. Planning is pretty important too, and that's there's documents that Jeff referred to that also I would highlight, and they're very important, and I think it's good to spend the time in this phase to really, really, really make sure that you understand and your partner understands what are you planning to do, what you can do, what you are expecting them to do, what kind of contributions you're expecting them to bring, and how you're going to manage that. I've seen in Mexico expectations that this JV will have employees and secretaries and photocopy machines and whatnot, and then you need to basically be clear that this is going to be a project, a very lean operation. This is not going to be a manufacturing JV in Asia where you're going to have a whole operation around this. So that's always critical. And then execution. Just make sure that things go as planned. A good local counsel is very important. Tax advisors are extremely important. And also, I think when you have the right partner, you can recalibrate and make all the adjustments that need to be made to go back to to your plan or to the new plan. Moving on to to the next, which is basically just a summary of what I just said is what are the most common mistakes. So I could pretty much fill in this whole webinar with the mistakes I made in M&A throughout my career, but I'll spare you from that, and I'll highlight which I found the most critical and common issues in M&A transactions. And I would say, cultural barriers is by far, to me, the most critical, which, ties into, that alignment that I talk about. It's very important to understand, when you're going into a new market, that, your organization understands and yourself understand how business is done in this new market. Mexico, Mexico and the United States are very similar in many ways. I mean, business is down, at massive volumes every day. However, when you dig a little bit deeper, the ways of doing business are very different, and the ways of negotiating and agreeing things are significantly different. So you do have to, have that awareness. Also, I think you have to help, your partner to, see your side, see, your conception of projects and, how do you approach it and why. And, I found that, the most time you spend, on maybe business meetings or business activities like, sharing, a meal or golfing or whatever you like to do, and take your partner out and get to know each other at a personal level can really, really, really pay off later on when you maybe need to go back to some of these hard issues and with it, much better awareness on how to solve those problems. The other important one is the, valuation misalignments. It is basically return expectation, something that maybe a financial model can help you with here. But I think it's very important to set those, as early as possible, and to be, I think working with scenarios is very important, because you can really have a realistic view of your model, and then you can also show some upside. I mean, Mexicans love upside, love that big opportunity. But I found sometimes people tend to be over optimistic. So you have to have those valuations, realistically done. Especially, I think that will fall more on you as the solar expert than on them. But those need to be addressed to me early on. And, I'm going to try to wrap up right now. Jeff, mentioned already, some of the legal and tax issues and other key issues. So I don't want to duplicate on that. So thank you for the time. And any questions, just send them my way. I'm more than happy to address those.
Great. Thanks, Alejo. And so with that, we'll move to the next slide. And Miguel, if you could give us a little background for the next 8-10 minutes on just kind of Mexico, the market, and then what we see for the Mexico energy reform.
Well, first of all, thank you for the two presenters, and thank you, Jeff, for the invitation. I will try to follow the good act. Number one, I think we have, in Mexico, we have begun a whole, I would say, restructure of the energy field, both in renewables and hydrocarbons energy. Now, the reason that I'm talking about restructure is, I'll give you an example quickly, which is the CFE, the Federal Electricity Commission. The Federal Electricity Commission is a state monopoly. It controlled everything to do with electricity generation, all the way down to marketing, all the way down to an energy supply, electricity supply. They control the grid. They control, which is even worse, the dispatch of energy. So they are their own judge. And they do everything from A to Z. Now, how do you deal with that in the background of an energy reform? Well, that's really where I think Mexico will have to strive to achieve state-of-the-art in many ways. I think it will be an evolution to become more competitive in market terms and international terms. However, I think the energy reform that has been presented now, first with a constitutional amendment, which is now in effect, which was resolved by December 20, 2013, and published. Now, why is that an important thing? Because that's the cornerstone of what is going to be the energy reform's, I would say, support. Now, why do we need a constitutional support? To avoid the many instances where before the government, either Pemex by need of financing and partners, but certainly the Mexican government for the need to make Pemex grow. Don't forget that Pemex, in addition to all the things that I said about CFE, is somehow the secondary treasury to the Mexican government and continues to foot many of the public expenses if not substantial part of them. So energy reform with constitution avoids having constitutional crises brought by people that are hurt by the opening, be those unions, be those the state itself, be those left parties, be those people that are disgruntled by an opening to both Mexican and international foreign investment in Mexico. So it is now becoming paramount that the secondary laws become law. The Mexican energy industry is now stagnant for more than 75 years. Stagnant in the sense of who participates, how much capital can it create, how much technology, how much innovation, how much do we want to create jobs, how much do we create national wealth for the benefit of the Mexican people. But mostly is what Alejo was saying, how can we share with international investors, with foreign investors coming into the country and working with Mexican investors, and either working with Mexican investors, working alone, or working with the governmental entities that take care of industry. The secondary laws will provide that the opening in oil and gas downstream and midstream sectors, the private investment and competition. Well, you see, the reason that I dwell on that is because there was no competition and there was no private investment. So that's a great achievement. Opening of the upstream and oil gas sector to private investment, and I find that gas and renewables will be the future to electricity here, and competition by ending the monopoly of the national oil company, as I was saying, Pemex, and introducing contractual framework that will allow partners to be awarded licenses. Licenses have been a great dispute here in the discussion of secondary laws. It was a great dispute in the constitutional reform. Why? Because somehow the word concessions was not acceptable. Somehow the word licenses was put in to assuage criticism. Now, licenses to me are concessions with a different name and perhaps with specific regulation doing away with what concessions would be conceived in the international market as the typical template of the manner of operation. But I am certain from reading the reform now of secondary laws that licenses will be very much similar to concessions and will be workable so that people can go and participate. Now, creating an open and competitive sales of electricity is important, and hopefully with an emphasis on renewables, but certainly with both hydrocarbons and renewables. But it basically means that the Federal Electricity Commission will be limited because now the creation of what you would call a control of the market pricing will come into place because now the dispatcher of energy will be independent. Now, we believe that secondary legislation will introduce world-class standards, both in corporate governance and financial independence, for Pemex, CFE, and now, which is the key to make them work, because to the extent they were a monopoly, to the same extent, they really were hamstrung to be able to participate in a modern world with world class. Then implementing the Mexico Oil Fund, as I was saying, will be very important for Mexico, and this is really the machine that will enable Mexico to grow its infrastructure, to grow in jobs, to grow in security for its peoples, in support of even retirement programs and so on. So it's very important to dwell on this point, because this is something that has value from a social impact in Mexico and from a beneficial impact in Mexico. Secondary laws, I think, will contain royalty structures, tax rates, terms and conditions of private participation, and so on. If we continue with the idea, then we get to the midstream and downstream sectors, and we obviously the first thing we have to emphasize there is the opening. They will allow natural gas processing, oil refining, transportation, storage, distribution, sale of hydrocarbons and petrochemicals, including derivatives to private investors. Therefore, just so you have an idea, feedstock was controlled by Pemex, or is controlled today by Pemex, and will no longer be controlled by Pemex. But feedstock would be at the whim of Pemex. So anybody that was in secondary petrochemicals or even basic petrochemicals, only the state was in basic petrochemicals according to a very, I would say, a very doubtful division that they made between basic and secondary petrochemicals. But that's why the Mexican petrochemical industry hasn't grown, and you get more imports of liquids into Mexico than you do almost in exports of crude. Upstream and oil and gas sector, I believe that we're going to have good contractual rights in the oil and gas fields to Pemex, but also to private investors. The round zero of Pemex has been a worry and will continues to be a worry, but it's going to be governed, I believe, by factual issues. The main factual issue is, will Pemex have the full financial ability, the full technical ability, and the innovation that is required to take the territories that it wishes? Pemex has been running around, not formally, but running around selecting in round zero fields, oil fields and gas fields and so on, that a kid would choose in a candy store. But you have to be careful that you don't eat too much candy or you're going to get sick. So I think regardless of what round zero may wind up being, because it has to be, at the end of the day, it requires regulatory approvals, and those will come or not come. So we'll have to be careful in how the Mexican government deals with that, but there will be plenty of room for private investors. The new contract framework is to allow the private sector in upstream oil and gas activities, flexible oil contracts, and which are standard in the industry, and will be important because it will define contractual arrangements. And where I'm saying there is contractual arrangements that necessarily include parastatal entities, which Pemex and CFE will be, but it'll be production sharing contracts, profit sharing contracts, and pure service contracts. We've had for 73 years service contracts with foreign companies, Mexican companies. They have not worked toward the benefit of the nation or toward the benefit of improving the industry, because they don't bring with them necessarily innovation, technology, new opportunities, financing, and so on. So then in the electric power sector, we have energy reform, and we have now, I would think that it's a good thing, because we have antecedents. This has been opened with all the misgivings, but sufficient to be able to do business. And so now I think the constitutional amendment will cure a lot of the issues that were there, which is electricity or power generation was a public service activity reserved to the Mexican state. Now is not reserved to the Mexican state. It will permit competition, electricity transmission and distribution, and planning and control of the national electric grid will remain public service activities reserved to the Mexican state. But I think now, and this is for the future, will the grid be sufficient to serve the future needs of Mexico? Will it be modern? Will it be modernized? Will they have enough money? Otherwise, people are going to start doing their own infrastructures. Maybe it will not be one infrastructure to cover the whole Mexican Republic, but then innovation will come in, and we will have to perform the service of transportation by private investment. But it has to do a lot with cost. It has to do a lot with permitting. But to the extent that the electricity transmission and distribution is remaining there, but you can do your own grid, I think it will be a great improvement. Then we go into changes to Pemex and CFE, and then they will be forced to compete in the market. The budgets will now be, before, as I was saying, they were the back pocket of the Mexican government. Now they're going to be more liberal in the way they're going to be handled, because the Ministry of Finance will be less prevalent in that. And the Congress will be watching. They'll have a new board of directors. Imagine before four independent directors were members of the four parties, some in power, some with minorities. So you can imagine how decisions went. And the Pemex Union Workers is out of the board. Then I think the role of authorities will change. Well, on the one hand, I'm expecting it will not create a morass of bureaucracy, but it will change the manner and the speed at which the government will deal with the relevant permitting. Ministry of Energy
Miguel,
manage and lead
Miguel,
energy
this is
public.
Jeff.
Yes. Sorry?
Hey, Miguel, so one question I guess we could ask, and we'll probably need to transition pretty soon to Iñaki, but is just the timing of all this. Well, how does this look in Mexico for the timing of this reform, and so that the investors and folks will have certainty on how it will look?
Well, I think what is expected, yesterday night, they completed at the Senate the changes to the electoral law, the elections law of Mexico, and that was the stumbling block to start discussing energy reform and telecommunications reform. Having said that, it's going down to the lower house today, and the lower house has committed that before the week's end or during the weekend, in the extraordinary legislative days they're living, will be approved. If that's approved, then the predicted schedule will be telecommunications, the first 15 days of June, energy reform, the next 15 days of June, completed. Now, if that is true, then we will have this by June 30. We hope to have what we need to know exactly how this is going to work. I think it'll facilitate things. I think the Mexican government is in the stance of attracting, protecting, and using private investment, both Mexican and foreign.
Okay, great. So maybe with that, we can spend the last few minutes. We started a couple minutes late, so we'll give Iñaki, you can go a couple minutes over here, but give you that. And before we move into that presentation, for those applying for continued learning education for CLE, we do have in the states that Francisco had mentioned, we need to, there's a code that you'll need to put in there, and that code is, it's a four-digit code. It's S as in Sam, 0, X, and then the number 9. So again, S, 0, X, 9. And if anybody misses that, they can just email us and we can get that to them later. But anyways, with that, I'll kind of pass it along to Iñaki, to you to finish up the presentation.
Okay, thank you very much, Jeff, and to the speakers for their very interesting presentations. I'm, as all of us, I guess, really looking forward to see what's going on and what's going to happen in June or July. So, well, we will see, because it seems that things are going to change for good. So, okay, so let's go over a couple of aspects to finalize this webinar. I'm going to talk about selecting a PV site in Mexico, and then I will give a couple of tips of due diligence. As Francisco was saying at the beginning, we are a full-service consulting firm for solar projects. We've been around since 2006, and right now we've been working in 20 countries, always in solar projects. In the Americas, we have offices in the U.S., Mexico, and Santiago de Chile. And we've been working as I here like for 4 years now, so I would say that we are kind of leaders with regards to IE services. So let's give a few tips of how to select a PV site in Mexico. The first parameter, or first thing to consider would be the weather conditions. Then the energy price, environmental aspects, and the proximity to the electrical lines are also going to be important. But first of all, let's start with the radiation and temperature. You can see a couple of maps here in the slide.
As you see, Mexico has great conditions for solar projects. Energy yields can be great, but they can vary significantly from one state to the other. Obviously, what we would want is the place with higher solar radiation and the lower temperature, being the radiation the main driver. So the highest radiation you can see in the red areas or in the pink areas in the map will be found in Baja California. We can have values close to 2,400 kWh per square meter, which is a really high value. And on the other hand, on the lower end, Veracruz maybe will show the lowest radiation levels with close to 1,900 kWh per square meter, which is the lowest of Mexico, but it is still a very high radiation value that can be compared, for example, with Northern California. So considering these values, if we do the simulation and we run the numbers, energy yields in Baja California can be as high as 2,500 kWh per kWdc for one-axis tracking, or 2,100 kWh per kWdc for fixed tilt, which is a lot. So it's difficult to reach in any other parts of the world, maybe with the exception of Chile. Well, but as you know, it's quite difficult to connect a project in Baja California Sur. So maybe other states that can be also interesting would be, for example, Sonora or Zacatecas in this sense. So it does not mean that a PV project in Veracruz, for example, or Nuevo León cannot be interesting. We can reach yields of 1,500 kWh for fixed tilt or 1,800 for one-axis tracker, which is still pretty high. So again, I mean, the weather is great and the meteorological conditions are great, but we can find huge variations depending on the states where we want to connect our project. Then, apart from the meteorological conditions, obviously the energy price, or at least so far until the energetic reform, the energy price is the other key driver. If productor schemes, we will need to check the CTCP, or the Costo Total de Corto Plazo pricing. You may know Mexico is divided in 24 nodes or nodos, where they have different CTCP prices along the year and between years. About the fuel prices, the hydrogen generation, the demand, and the capacities. The highest prices, we're going to find them in Baja California Sur by far, with more than $200 US per MWH. And it's really difficult to find some place to connect a project here. So maybe other interesting areas with high prices, but more normal prices, can be Sonora or maybe Durango. The graph in the slide that I'm going to show right now is a little old, but here we can see how the different nodes are giving us different pricings, and how these prices are going to vary from one year to the other. So obviously, the best side will be that with really high radiation and really high price, but also we're going to have a lot of competition in those. So for other aspects to select a site is pretty. One thing that is important in order to ease the permitting process would be the current and former activities at the site. If we can find a place where the land or the soil has been affected or altered in the last 5 years, it will be perfect. This will ease or even waive the MIA process, which can be really tough. In Mexico, we have lots of protected species. Especially cacti are well protected in Mexico, and they are quite frequent. So if we are checking sites, we're checking land, we would better avoid the land with cacti when possible. Other factor for sure is going to be the proximity to the interconnection point, which can be a substation or an electrical line. Of course, we would prefer something that is close to the interconnection point. And if we are talking about a 30 megawatt project, I would say that as a rule of thumb, we can say that 5 kilometers away from the interconnection point will be good. And, obviously closer will be better. And we can go, we have seen projects as far as 10 kilometers. It's going to depend on a lot of factors. Talking about these 30 megawatt projects, which is the most common there, I would say that we will have to go to a 150 kW line. Maybe for smaller projects, 5 or 10 megawatts, we may be able to connect to a lower tension, like 34.5. But again, it's going to depend a lot, and in each case, the CFE will decide. So weather or meteorological pricing, activities, vegetation, and electrical connection are going to be the main aspects. Then we have other aspects that are also going to be important and that are common to anywhere else in the world, like good access to the site, security area, good soil conditions. We don't want rocks, creeks, lines of road dividing our plot. If we can do it, we would prefer single owner to deal only with one landowner. And depending on those factors, land prices can vary a lot. I mean, it can be, I would say, like $500 per acre will be a reasonable price. And over $1,000 per acre starts to be a little expensive. But again, I mean, it's going to depend a lot. And if we find the right, it's for sure that we want to pay even a higher price. So that's for selecting a PV site. And then to finish, and I don't want to extend myself too much, a couple of tips about due diligence considerations. The due diligence, or at least the one we do, which is technical due diligence, is also pretty much business as usual. It may take a little longer than they expected, as the lenders are in the learning curve for solar projects there in Mexico. They know a lot about wind, but solar is still kind of new, so it may take a little longer. In this sense, it's for sure highly recommendable to choose companies with a specific experience and presence in Mexico to avoid surprises and delays. And apart from that, performance-wise, I would say that projects are pretty much the same than in a project in Southern California, New Mexico, or Arizona. The main factor that is going to affect the performance will be obviously the temperature, which temperature losses can reach up to 12% or more on an annual basis. And another factor that we will need to monitor is the soiling, as it could go too high if we don't monitor it properly, and we can have some surprises at the end of the year if we don't monitor it properly. The rest of the items are going to be, as I was saying, are going to be pretty much the same. So yeah, I think this is it on my end, Jeff. So maybe we can open up the floor for questions now.
Yeah, thank you. So we've gone a little over the time period, but I wanted to thank Francisco, the moderator, and then our panelists, Iñaki, Miguel, and Alejo. If there's our contact information is right here, so if there's any follow-up questions or comments, feel free to reach out to us. And then look out for our session 2 of the boot camp, which will be on financing projects in Latin America. So with that, we can finish up. Thank you.
Thank you very much.
And that does